Speaking of growth, Chris, back on you now. Myer today, you know, again, it's not a massive downgrade, but it might as well be, because every step of the way they seem to be 2 steps forward and then 3 back.
Yeah, absolutely. Look, I've been on record, guys, are saying that I hate this stock. I know that's a strong word, but as an investment case, I really do hate it. It's a shrinking sector of an industry that's in trouble. They're 2.5 years, or their deputy CEO is 2.5 years into his role. He's the chief in charge of customer and product purchasing, and he's bitten the bullet. So 2.5 years into a program that's going to cost you $600 million to try and turn the business around, you're firing the guy that's in charge of purchasing your inventory. It couldn't get any worse, I wouldn't have thought. The only possible saviour is Solly, but I think he's smart enough to know that he's got a stake only as a blocking stake, so that if someone does come in and take it over, he can extract a premium like he did with his country road situation. So,
and in
yeah,
those
I really
shots that
don't
we were
like
showing
Myer
as
at
well.
all.
We were showing shots there as you were talking, and basically the only time that there were people queuing was when there were sales, because it's kind of almost got that feel of a flea market now, really, to it, does it not? To that extent. I mean, what is the draw? Oftentimes, even when you go to Melbourne, there's a Myer bang beside David Jones. So why would you saunter through one, not the other?
It's an icon of days gone by, essentially.
That's the problem, isn't it?
And I'm certain there's a video shop somewhere out there, and they're not necessarily going bankrupt tomorrow, but you just have to, as an investor, you just have to question whether you need to be there. I mean, I've declared Myer in the past uninvestable, and outside of short-term considerations. And I know there's different forms of investing. There's people who will buy anything as long as it's cheap enough. But I think the lesson to be learned from Myer experiences is that when a sector is under downward pressure consistently and continuously, then the bias is to the downside. I mean, bad news will come out at some stage, and it will hit, in particular, the weaker players the hardest. And you would have to assume that when it comes to brick and mortar retail, the kind of business that Myer is operating is on the weaker side.
It's matching Bellamy's in percentage decline terms this session, so go figure.
I'm not so sure anyone wants that wooden spoon.
Well, no, but they're fighting over it, for better or for worse, by default. Back on you, Chris Conway. We just flagged there Santos and a call from Deutsche, a cutting of the price target to 425, so 25% reduction there, but retains a buy there. So what do your what do your senses tell you comes next for this story?
Look, on balance, I thought the results this morning, pretty much like everyone else, were solid. The uptick in sales and production, and of course the uptick in revenue is the big driver. The paying down of debt. I remember it wasn't too long ago that I think that Santos had about $6 billion worth of debt. Now they're down to 2.9. So that's encouraging. It seems like management has got things moving in the right direction, but one set of solid numbers coming off a pretty low base isn't enough for me. I might trade it down here, looking to capture a bit more of a pop, although I think in the lead-in, Carson, you said it was already up about 7 or 8%, so there might not be much more in it. But yeah, it's not enough for me off the back of today's numbers to rush back out into it. And then, of course, as always, it's going to be tied to the oil price. Rudy and I have had some pretty vivid debates in recent weeks and months about where we think the oil price is headed. I think it's maybe back to about 50, capped at absolutely 55. Rudy's probably a little bit lower than that. So, you know, even if they do get things moving in the right direction, it's capped by a limited upside in oil price.
If there's any saving grace, Rudy, is it the fact that it's not in the top 10 most shorted? So whilst there could well be, and it will be a component of a short squeeze to this today.
There's 2 reasons why it's not in the top 10 of most shorted stocks. One is it already has fallen such a long way. The second one is that there's a substantial part in the market of participants that haven't given up yet that the oil price might at some stage break out of its current range.
And yet the instos at the height of its troubles clearly were wavering and lent their shares out to short sellers. Think back when the stock halved in value.
I know. That whole lending and borrowing of existing stock, I mean, it goes beyond my imagination. But I mean, there are instos who do it. They make an extra buck out of it, and they see the share price drop as a result. Their justification is always, from the moment that they believe it has a substantial impact on the share price, they stop doing it. but I'm not so sure how they exactly measure that. But yes, right. Santos is for the brave hearts and for those who believe that the oil price at some stage will be a lot higher.
Okay, well, there's another story with a tragic component to it, and that is Domino's, which put out a note just a short while ago to say that a employee had died at one of its facilities. I believe it was Brisbane, Queensland, in that vicinity. The stock, though, is finding some support. Not to peg any of that to this news, but it's just interesting that that's not played any role in any negative spin, at least today, perversely. It is heavily shorted, though. Just speaking of the shorts, that came in the latest read, number 10 on dollar value, most shorted. Thoughts on this one, Chris Conway?
Yeah, so I think the excitement around Domino's has evaporated, and that's reflected in the fact that a number of brokers have been downgrading the stock recently, from my memory at least anyway. I think they've had trouble integrating their operations in Japan, and I think their Europe division probably isn't performing as well as what they had initially hoped either. So, like I said, the initial euphoria has worn off, and I think it's now incumbent upon management to drive the next phase of the business, and not with gimmicky things like, flying pizzas in around via drones and that sort of stuff, but, proper sustainable growth.
Rudy, are Don's best days behind him?
Share market-wise, yes. Business-wise, probably not. And there is a major difference there. What Chris just says is correct, but investors have to realize why that is. In previous times, the pressure was to the upside in terms of margins, and that means that the pressure is also to the upside in terms of share price valuation and PE ratios. Now the share price, the pressure is to the downside now, and that's why the de-rating has to happen, and that's why the share price has to come off, and Don May will have to somehow find a way of absorbing the pressure to the downside, and at the very least come out with a result in August that gives the market enough confidence that they can sort of stabilize the margins, because that's, as far as the valuation goes, that's probably the most important thing now for Domino's.
And we go to the break just briefly. Kicking Pepsi out of the offerings. I mean, that might have seemed like just penny pinching, but is that?
No, that's proof of the margin pressure.
Yeah,
that's why they go for Pepsi instead of Coke, because obviously they got a better price there.
Do we worry about that though? About customer loyalty, just on a whim, just biff them out? Assume everyone will just make a switch.
Well, there's only two choices they have: either Coke or Pepsi. Yeah. Now it's Pepsi.
Right. Okay. You're stuck. Tough. Life is tough. First world problems. Chris, thank you so much. Appreciate it. Chris Conway from Australian Stock Report. We're going to take a really short break. Lots more with Rudy. Plus, we go live to Aqualis Consulting's Simon Bolton. His take on today's jobs release just after this short break.